Alright, today I've done a ton of research for you guys on Big Lots Inc. So ticker symbol BIG. This was the excellent suggestion once again from the comment section. This is a very interesting cyclical case of a company that's very tightly tied to consumer spending and how the American consumer is doing. We will take a quick look at the opening of their earnings transcript. We will take a look at the big smoking gun that, in my opinion, is what's causing the share price to plummet. And we will take a look at insider transactions as well. There's a ton to unpack on this company, but I definitely think that there's a money-making opportunity here. And from the analysis that I've done over the last couple of days, I see that the next step that I need to do is to take a look at the debt as well, the maturities, the rates that they have on the debts, and just get a picture if it's negotiable or not, because no surprise, it's the liquidity concerns that's causing this stock to plummet, in my opinion. And if there are a good case for renegotiation, for selling off some assets and making sure that there's liquidity, well, then this is an excellent turnaround case. It's a trading opportunity that goes with consumer sentiment, consumer spending power, and we've not really seen a recovery in that sector yet, although we've seen other sectors performing extremely well, such as tech. And analysts today are asking themselves, all right, when are we going to see the market rally reach the broader market and not just be driven by tech? So this is a very interesting play because of that, in my opinion. But enough with the intro. Let's get right into it and take a quick look at some of the insider transactions. And I have collaborated this statement with other sources, such as the Nasdaq records as well, and they all match up perfectly. Of course, it's a larger company, so we don't have the data quality issue that we've seen when doing analysis on some other stocks. But as you can see here, there has been grants, so this is part of the equity compensation. They are not really buying them themselves, they're just getting it as part of the compensation, the C-level compensation here. So this is for May the 30th, 2024. I've watched a few videos online on YouTube here for this stock as well, and I've seen comments on those talking about the recent insider buying. And sorry to dispel that myth, this is grants. There has been buying, although as you can see, insiders are not always right. There was a bunch of insider buying here, the latest one in the end of 2023, and then we had a bunch of insiders buying here in June and May of 2023. So just around $5 a share back then. And as you can see, share price has absolutely plummeted now to $2.3 a share. So a big loss for insiders who clearly believed in the company back then, although it continued to go down. And it correlates a bit with the market's belief in rate cuts that has not come to fruition. Just look at the latest meeting from the Fed, where we believe that we would have cuts. There was some market rally, it was very short-lived, and stocks dived once again after those news. So that was that regarding the insider buying. If we take a look at the debt to equity ratio in this case, let's take a look here at total assets for the most recent quarters. So the numbers that you're looking at now on the balance sheet is in thousands of dollars. So this number here for total assets for the end of the first quarter in 2024 is actually 3.3 billions. And in terms of how this is financed between debt and equity, we can see that total debt is 2.2 billion. And this is very ridiculous, in my opinion. This is the numbers that we're seeing from property companies in terms of debt to equity ratio, like the average one with 33%, so 1/3 equity and 2/3 debts, and we're seeing this from a consumer company. We're also seeing cash on hand being quite low, cash and cash equivalents. So that's why in the opening of the video I talked about the need to do a second video in this case and break down the debt, because this debt is broken down into current debt and long-term debt, and if I take a look at the investor relations page I will be able to find that information. And I will also have to look at the individual contracts in this case. But if you've been following along the channel for some time, you're no stranger to that type of video. You've seen me do it for Hueng LNG, you've seen me do it for Porch Group, and you've seen me do it for a few other companies where there were great interest. Also, speaking of the balance sheet, we can take a look at share dilution. None to be spoken of in this case. As you can see, it doesn't really change from quarter to quarter a lot. So it's not like when you guys suggest small cap biotech companies that are doing drug pipeline and just funding research and development by issuing more shares and competing against the clock. In this case, the company is competing against the interest rates. And we can see that clearly if we switch to the cash flow statement in this case. So the cash flow statement always divided into three specific areas: the cash flow from operations, investing and financing. And in this case we can see that operating cash flow has been negative as well. Although if we zoom out here, there's actually some turnaround potential. We can see positive cash flow from the first quarter of 2024, and this is super interesting. And they've used that cash flow to pay down on debt. So as you can see from the financing cash flow, if we press down here, we're gonna see this more in detail, and we're going to see net issuance payments of debt. So they're not taking on more loans that would give positive cash flow from financing. They're repaying loans. So that's why we're seeing this big negative number. Once again, remember these numbers in thousands of dollars, all right? So it's a big number. So they're paying down on the debt, and the positive cash flow here actually speaks on a turnaround case potentially. So I did some more digging and took a look at inventory, because this is super important for this type of company. I did some quick research here on their webpage before, just scrolling around, taking a look at the type of deals they were having. You know, they have the different furnitures and all these kind of things, and just classifying the company, taking a look at the spread on it, and we can see that the inventories are actually declining. So that's meaning that they are moving product. This is super important. This has been a big issue for example, clothing retailer H&M, where they saw this pile up in inventory that investors absolutely hated. And in this case, we're seeing them actually moving products off the shelf. And you know, in H&M's case, they had to burn clothes and face a backlash from media as a result of that. But in this case, they are moving product. They are seeing positive cash flow from operations. And I took a quick look at the part of the business, the revenue that's coming from e-commerce in this case, and they have a growing presence online indeed, and we could see a slight decline here from 2022, although the market absolutely loved this company here in 2020. We saw it absolutely explode in terms of e-commerce revenue online. This correlates nicely with the stock price. So based on business experience, I can see that they indeed benefited hugely from the pandemic, and they made a shift to be able to sell products via this website more. And as a person who used to work at Google, I can clearly see that the setup here is perfect for that indeed. It might look messy, but they have all these different products that they can add to a merchant center and just pump out ads on online. So the numbers add up here in terms of building that e-commerce revenue. So we're seeing the profits from operations here in the latest quarter. We've seen insiders buy in, although it might have been a bit early. But now the next super important part of me doing an analysis on this company, and I'm gonna split it off into a separate video and do this at a later stage, not to make this video drag on for too long, but that would be for me to take a closer look at debt in this case for this company and break down the current and the long-term debt and see if it's actually sustainable. And I will also need to take a look at liquidity plans for that company. So that's been it for this video, and as always, hope you guys make a ton of money whatever investments you decide to make. Take care now. Bye bye.